Bitcoin, the market is disappearing. Everyone is talking about Bitcoin hitting 150,000, even 200,000, but at first it sounded like just another round of crypto hype. But now, some analysts are saying it could happen as early as July. And when you really look at the data, it might not be as crazy as it sounds. But here's the thing. Most people are focused on price charts and headlines. They are missing the real story, where the big money is moving, and why this time is different. I'm Neil, and today we will see where the market really stands, what's driving Bitcoin's momentum, who's behind it, and what you need to watch next. Alright, so let's break down the latest battlefield using the Heatmap. Bitcoin started the session at 108.2k, but quickly slipped down to 106.8k. Buyers stepped in, they caught their breath, and pushed the price back up slowly, eventually reaching 108.8k. There, you can see a wall of liquidations. But the rally didn't last. The price was rejected, crashing down to 106.4k, triggering a wave of long liquidations on the way down. It bounced briefly to 107.8k, but hit resistance again and fell hard, this time to a new low of 105.6k. Another round of liquidations got triggered there. Then we saw some sideways movements until the price dropped again to 105k, tried to rebound but collapsed even further to 104.6k, setting another local low. Eventually it bounced back up to 106k, where it was sitting at the time of this recording. Let's talk resistance zones first. 106.5k to 107k, immediate resistance. You can see those yellow lines stacking. Then from 107.5k to 108.3k, we've got a zone packed with liquidation traps. And above that, a thick resistance sailing stretching all the way to 110.8k, especially around 109.3k, 109.5k, and 109.7k. Now, for support. It's a thinner zone, but we've got support between 104.4k and 103.5k. Conclusion? Right now, Bitcoin is stuck between strong resistance and fragile support. If the price breaks above the 107k zone, especially clearing out those liquidation traps around 108.3k, we could see a sharp move up toward 109.5k, maybe even 110.8k, and that's where the next major resistance wall sits. But if the price loses support around 104.4k, and especially dips below 103.5k, the door opens for a deeper correction, and things could get rough fast. So keep watching those key levels. The next breakouts, up or down, could be explosive. Alright, we've gone over the key price levels and how Bitcoin is doing on the charts. Right now, as we see on the Heatmap, Bitcoin's price is experiencing a short-term pullback. The market is correcting and sellers are in control for the moment. But this is just the surface story. Zoom out, and the long-term signals tell a very different story. Bitcoin has a strong potential for an explosive rally ahead. Why? Because the supply is shrinking. Institutional demand is building, and key macro factors are aligning to create a perfect storm for massive price appreciation. I will explain these reasons in detail in the next section. For now, just keep in mind, short-term price drops and don't mean the bull case is broken. In fact, they often set the stage for the next big move up. But honestly, it's not just about the technical stuff anymore. A lot is happening behind the scenes. And that's why all the big players are dumping money into Bitcoin right now. Let me explain. Look, there are thousands of altcoins out there. Ethereum, Solana, Polygon, XRP, even meme coins. But right now, all the big money and institutional focus is on Bitcoin. Why? It's simple. ETFs. Since Bitcoin spot ETFs got approved, massive amounts of cash have been pouring into Bitcoin. Giants like BlackRock, Fidelity, and Invesco aren't just trading day to day. They are driving a system-level shift. The US market, regulations, even Wall Street narratives are changing. You might hear rumors about ETFs for XRP or Cardano, but those aren't coming anytime soon. The market is testing Bitcoin first, then Ethereum, and only after that will a few select altcoins get their shots. So right now, this isn't a broad crypto rally, it's a Bitcoin-only show. Altcoins? They are just waiting on the sidelines. Usually, Bitcoin leads, Ethereum follows, and then altcoins explode during alt season. But we are not there yet. Bitcoin is the star of the show now. Its dominance is soaring, most fresh capital flows there, and even the media can't stop talking about it. So, if you're holding altcoins and wondering why they're not moving, that's normal. Money moves where it's easiest to understand and safest for big institutions. And right now, that's Bitcoin. Don't miss this trend. Understand why Bitcoin is stealing the spotlight, and you will be ready when alt season finally hits. If you're tired of Bitcoin, just wait. The quiet moves happen before the big jumps. So here's the deal. Money is moving and it's all flowing into Bitcoin. Most people don't realize this, but you've probably heard questions like, why isn't Ethereum moving? Or, my altcoin has great tech, so why isn't it going up? But that is the wrong question. It's not about the coin itself, it's about where the money is flowing. Right now, institutional investors and wealthy players are pouring cash into one place, Bitcoin, because it's the safest bet, easiest to explain, and most trusted asset in crypto. When you mention Bitcoin, people listen. Mention Ethereum or altcoins, and talk shifts to risk. That's how institutions think. They want certainty, not wild bets. Bitcoin's dominance, the share of the crypto market it controls, is climbing steadily. Nearly all fresh money entering crypto goes to Bitcoin first. In the past, altcoins outperformed Bitcoin because they were smaller and more volatile. Now it's the opposite. Bitcoin's gains are steady, strong, and quietly outpacing the rest. But here's the catch. Most retail investors don't see this. Altcoins feel cheap and easy to buy, so it seems like the better opportunity. The truth? Bitcoin is the fastest, strongest, and most attractive asset today. This isn't a short-term trend, it could last months or years. Institutional money moves slowly, but when it flows, it keeps flowing. Right now, the money is going into Bitcoin. What should you do? Simple. Stop obsessing over charts and candles. Watch where the money flows, follow the capital, ride that wave. Don't force trades where you want them to go. That's how you survive and make money. Most people get it wrong. When the market flows clearly to Bitcoin, they chase alts. And why? Because they don't understand how money and markets work. We've all heard buy low, sell high, but many do the opposites. Buying high on hype, selling low on fear. The wealthy play differently. They buy when prices drop. That's the real opportunity. Bitcoin isn't just an asset anymore. It is becoming the system. The richest people aren't thinking about tomorrow's price. They are thinking long term, like 10 years from now. They believe Bitcoin could be worth 50 or 100 times what it is today, and they're acting on that. Meanwhile, retail investors panic at small dips or slow days. They buy high, sell low, stuck in loop. And what is really wild? About 95% of Bitcoin is already owned by someone. The last 5%? It's disappearing fast, with institutions buying every day. Most people chase random coins hoping for a 1000 times shots. That's just gambling, not investing. The winners aren't the ones with the most info. They are the ones who understand the trend. They drop their emotions, see where the money is, and follow it. That's what wealthy investors do. It's not too late for us to catch up. Why is Bitcoin winning? Is it the tech, the limited supply, the decentralization? Sure, those help. But the real reason is simple. The rich want it. Cold truth. Money follows the wealthy. And right now the wealthy are choosing Bitcoin. We are talking about insane sums moving steadily in one direction, and it's not about hype or news. It is about one question. Will this asset protect my wealth for the next 10 years? Bitcoin checks all the boxes. Fixed supply, inflation-proof, perfect for the digital age. JP Morgan, BlackRock, Fidelity, these giants are quietly building Bitcoin position. They say, be careful, it's volatile. But behind the scenes, they are opening accounts, launching funds, and getting ETFs approved. What does that mean? Bitcoin isn't an outsider anymore. It is a legitimate asset, recognized by governments and institutions. Bitcoin isn't resistance, it is the system now. And for wealthy investors, it is about preserving and growing wealth. The supply is fixed. Mining is slowing, liquidity is drying up, only early buyers win here, and the wealthy always get in first. We are just following their lead. Bitcoin isn't just an investment anymore, it is becoming money itself. You might have heard of Bitcoin staking. While Bitcoin isn't proof of stake, new DeFi tools let you earn passive income by holding Bitcoin on other chains. Just holding Bitcoin now can earn you yield, and that's a game changer. Soon, you will be able to get loans using Bitcoin as collateral or payback loans in Bitcoin instead of dollars. If Bitcoin's price rises, the amount you owe in Bitcoin actually drops, making it a deflationary currency. And that's huge. At that point, Bitcoin won't just be an investment, it will be the core of a new financial system. Only a few coins will be part of this system. Bitcoin, Ethereum, maybe a handful more. The rest, just passing trends. So here's the choice. Do you see Bitcoin as just a trade or as a key part of the future financial system? How you answer will shape your next 10 years. Why do small investors still chase altcoins? Because they think, if Bitcoin doubles, I will only make $1,000. That mindset? It's about desperation, wanting to get rich quick instead of waiting. They hope for a big shot, but most don't even move. Once again, that's gambling, not investing. Cheap coins feel like you can buy more, and small market caps seem ready to pop, but that's an illusion. Meanwhile, the wealthy quietly stack Bitcoin. They don't say, only $1,000. They say, if I own 1,000 coins, doubling means 1,000 more coins worth a fortune. That's the difference in mindsets. Return versus structure. Over time, that mindset makes all the difference. Short-term traders get tossed around by volatility. Those who understand the structure see their wealth grow naturally. After a year, 3 years, 5 years, that gap becomes impossible to close. Most people keep chasing a rat face coin or whatever, even when they know better. Don't be that person. And before moving to the conclusion, here is something important. Time is on our side, just like it is for the wealthy. People always ask, how much did you make? Or how many times did you multiply your money? But the real question is this asset working for you over time? The wealthy know the answer. They don't fight time, they use it. And that's what we are seeing with Bitcoin right now. 2025 isn't just another year, it's a turning point. Mining rewards are shrinking. Institutional buying is accelerating. And one day, not far from now, you won't be able to buy Bitcoin on a regular exchange. This isn't just about scarcity. It's about holders, people and institutions who aren't selling. When enough of them lock it away, the market changes forever. Owning one Bitcoin will be like owning beachfront property in Manhattan. Even 0.01 Bitcoin will be a flex. Those who understood the trend early, they will be the ones with passive income, growing portfolios and real financial freedom. People say, 10 years is too long. But here's the truth. Those 10 years will pass no matter what. The only question is, what will you be holding when they do? Altcoins? Or the hardest asset ever created? The wealthy don't chase pumps. They think in decades. They build quietly. And that's how generational wealth is made. So let us stop chasing hype. Stop fighting time and start understanding the system. Because Bitcoin isn't just rising, it is replacing. And if you're paying attention now, you're still early. Thank you for today. That was Neil, and as always, stay sharp, stay informed, and I will catch you in the next one. Bye bye.